Okay, so yesterday we have seen base method, decline balance methods, maximum amount method, and a multi-level method. Multi-level method is the most important method in this. Okay, so the next we have is the period control method. So all these are to be considered in the depreciation key. The next step we have is the depreciation key. Okay, so before we get into the depreciation key, let's discuss about the period controls. What exactly this thing is. Period control basically helps in calculating the depreciation, whether you want to consider the start of the month or middle of the month. In what cases we normally come across this kind of thing. Let's say I have procured an asset on first of January. Okay, on 1st of January I have procured an asset. So system will calculate for full month. Now if I procure it on 10th of January, so whether you want the system to calculate from the beginning of the month or you want to calculate from 10th of January. So if you want the system to calculate from 1st of January, then this period control will help you. Even though you procure it on 10th, 15th, 20th, you want the system to calculate from the first day of the month, then we will be using this period control for that purpose. This is not only useful in the case of acquisitions, it is helpful in the case of subsequent acquisitions as well. Subsequent acquisitions in the sense I procured an asset, and to this asset I have added few more sub assets or some other assets. So those are called subsequent acquisitions. Let us assume I procured first monitor and CPU. I'm just talking about the computer case. Then I have added keyboard, I have added mouse. These are the additional acquisitions, right? Additional acquisitions. So it not only applies for the new acquisitions, it also applies for the subsequent acquisitions. This is about acquisition. How about the transfers? Transfer in the sense moving from one company code to the other company code. How about retirements? Retirement, nothing but sales here. Sales can be anything, with value, without value. Maybe we'll realize some amount out of the sale, out of the retirement, or we we are not going to get anything from the uh, from the sale of the asset. So basically, this talks about for all the movements of the assets happening within the organization. So period control basically helps to determine the the date from which it has to calculate the depreciation. Okay, in the case of sale, suppose I sold it on 10th of January. So whether do you want me to consider for that month 1st to 10th or 1st to 15th, or do you want to consider full year, full month? What is that? What is the expectation? And we will be doing that accordingly here in the period control methods. Okay, so it applies for acquisition, subsequent acquisitions, retirement, and even in the transfer cases. Okay, so let's get into this period control methods. Path for this is IMG, financial accounting, asset accounting, depreciation, valuation methods, depreciation key, calculation methods, and maintain period control methods. Just execute. So our chart of depreciation is 1001. So these are the period control methods assigned to our chart of depreciation. By default, we will have all these. These are the standard SAP standard period control methods. Okay, so we can go ahead and use the same thing, or if you want, you can create your own. It's just a code with some description. Now, the important point is over here. The important point are all these. These I mean 01, again you can see 0102. All these are SAP standard ones. All these are SAP standard ones. You can see them in the subsequent steps. These are all the SAP standard ones. Okay. Now, if you see over here, this is called an acquisition. This is called an additional acquisition. Okay. So this is called an acquisition. This is called, I'm not getting the, okay, let's click over here. I'm going into, F1, click on F1. So acquisition, this is for acquisition. And here, this is for additions, additional acquisitions for in the following year. Okay, it means in the same year or in the next year or so on and so forth. And this is in the case of retirement, and this is in the case of transfers. So basically we will be dealing with all of them. And the next we have is, this is called revaluations, I think. Just selecting yes. Period control for revaluation, and it is nothing but investment. Yeah, investment support. This is for investment support, investment management, and F1. This is for unplanned depreciation, write up or write down. Something is there. Write ups to reserves. So these are all the different methods that we have here. So if you want to have a revaluation, how do you want to, how do you want the system to consider, how do you want the system to calculate depreciation in the period of revaluation? And if at all investment support, I'm not sure about it, it's a different module altogether. So unplanned depreciation, in case of unplanned depreciation, we will be looking into those kind of transactions once we get into the front end. So how do you want the system to consider? In the case of uh, write-ups, how do you want to consider? So normally we don't see any information over here. If you want, you can maintain based on the requirement, but normally we can see them. Now coming to the acquisitions, additions, retirement, and transfers, how do you want to consider? Now I'm just selecting over here. So what do we have? 01, what it is? It is pro rata at period start date. What does it mean? With this, the depreciation will calculate from the beginning of the period. Let's say I procured an asset on 1st January. So it will calculate from 1st January until 31st January for calculating the depreciation for that specific period. Now, if I procure it on 10th of January, 15th of January, 20th of January, 29th, how do you want the system to calculate? Do you want to consider from the first day of the same month, or do you want to consider middle of the month, or do you want to consider first day of the next month? How do you want to consider? This is what explaining here. The moment I say 01, it means irrespective of the date, the system will calculate starting date of that particular month in which the asset is acquired. So even though if a particular month has 30 days, even if you are procuring it on 29th or 30th, system will start calculating the depreciation from first of that specific month. That is the meaning of this 01. Next, we have two. We have two. 02. What does it mean? Pro rata up to mid period at period start date. So 02 is in the case of retirement and transfer. What does it mean? Pro rata at start date up to the middle of the period. So it means beginning of the month up to the first half. Beginning of the month up to the first half. It means if you are if you are selling the selling the asset up to mid of the month. So system will calculate half of the month. Let's say I'll take up an example over here. Let me explain you on this. Okay, beginning of the month up to the first half. Okay, so what does it mean? It means I have procured an asset in 2000. Okay, using it until now. Now I'm selling it on 10th September 2019. So in this case, in the case of retirement and in the case of retirement or transfer, what is the system that it is following? We are going by the second 02. What it is, pro rata up to mid period of period period start date. So it means if you are selling it on 10th of September, still system will consider the depreciation until 15th September of that particular year, even though we are selling it on 10th of September. But if you are selling it after 15th, let's say 17th of September 2019, still system will calculate until 15th September only. It means it will ignore the next half month. It will ignore the next half month. Even though if you are selling it on 17th, 20th, 25th, system does not consider at all. System will consider only the first half month. That is what the 02 talks about. 02 talks about. Any questions in 0102, because this is the most important.
What about if this asset we sell at 29th or 28th?
That's what I'm saying. If you are selling it after 15th of September, whether it is 17th or 5th or anything, system will consider up to 15th, the first half month only.
Okay.
It considers only the first half month.
So
Of
system
course,
doesn't, okay, system does not,
just ignore.
okay.
Yeah, just system just ignore that. But again,
Okay.
in depreciation key, a we have one concept, day wise depreciation. If you select that, then what happens in that case is, if you are selling it on 28th September, system will calculate for 28 depreciation. For 20, system will consider 28 days for calculating depreciation. There is a check button in the depreciation key, day wise depreciation. I don't remember exactly the term, but it is like, day wise depreciation. So if you select that, then system will calculate based on the number of days that we are considering. It basically takes care of that part. If you are procuring it on 10th of January, so from 10th January to 31st January, so 21 days will be considered for depreciation in that particular month.
So
So
it's
if you
not like,
don't select this, then this becomes the most important. Okay,
okay.
yeah, tell me.
No, what I was, thinking, since, that we are approaching to very close of the month, so system
Mhm.
may go, just like round up and round down, so system,
Round up,
don't.
round down is a different concept.
No,
If
I
at
know,
all
but
you have,
what I was thinking, that since suppose that September is the 30 days. Now we
Mhm,
are selling at 29,
mhm,
so we will be losing whole from 15 till 29th. So in
mhm,
that case, we are very very near to the end of the month.
mhm.
So in that case, don't
Then
company would be
you don't
beneficial.
select
We
this
can
one.
get.
Don't keep this thing.
I see.
You just select a day wise.
I see.
We have still an option.
Okay.
Okay. So that
Okay.
is the meaning of this 02. Like that, we have different prorata at mid period. So always it considers mid period only. Always it consider whether it is happening prior to 15th or post to 15th. Always it consider 15 days in any case. Okay, you can see in 0 to period control 002, you can see 03, and we have 06. What it is? It's start of the year. Always system will calculate start of the year, even if you are procuring it in June, July, or somewhere. It considers 1st of January. That's totally depends on the business scenario. Okay, so we can go ahead and use the same thing, but most of the times we will use this one only. 01 prorated period start date in the case of acquisitions and addition, 02 in the case of retirement and transfer. Even if you want to keep this thing, you can keep it. And if you don't want this to consider, you want to consider day wise, I mean the days based on the number of days that we have in our organization, then you can calculate the depreciation accordingly. Okay, so this is about period control. So normally we will use 001 back. So the next is the default values. It's a new thing. I'm not sure. Proposed value for depreciation areas and company codes. Let's get into that. Proposed values for depreciation areas and company codes. So probably it is giving some values to put as a default value. So let's get into that and see. Proposed values for depreciation areas and company codes. Path for this is IMG, financial accounting, asset accounting, depreciation, valuation methods, depreciation key, default values, proposed values for depreciation areas and company codes. Just execute. There is nothing in this. Go to new entries, then company code depreciation key. Okay, so we are putting some default values at the in the combination of company code and depreciation area. In the combination of company code and depreciation area, of course we have another step where we can use the same thing. So we don't require this step at all. So multi-shift, all these things will be covered. And of course we have already maintained interest key. This interest key may be of two types. One is the depreciation key, the other one is the interest. Do you want to consider interest after the useful life of the asset? In such a case, you will be creating an interest key. It is just similar to that of depreciation, and you will be assigning it over here. Of course, it is not required, just coming out. We have uh, we have seen one place where we have maintained the depreciation key, default depreciation key by asset class for depreciation areas. We have seen, again we will go there and we will discuss them as well during our front end. While posting the transactions, we will see, we will go back to that configuration and I'll show you that. Yeah, the next is the maintain depreciation key. This is the most important part. Whatever we have seen so far, all will be discussed here. It means base method. We have seen the base method, declining balance, of course, which is an optional, maximum amount, which is an optional, multi-level method, and period control. All will be considered here in the depreciation key. So maintain depreciation key path for this is IMG, financial accounting, asset accounting, depreciation, valuation methods, depreciation key, and maintain depreciation key. Just execute. So these are all the depreciation keys that we have. There is one depreciation key. I think it starts with a G or something. See, this is the low valued asset depreciation key. 100%, 100% complete depreciation. Okay, these are all. uh, these are all the standard ones. I think we can see some created ones. I'm not sure which are created ones and which are standard ones. That's fine. So if you want, we can use them, or if you want, we can create our own. So in order to create our own for 0%, all we can use this one, 0000. If you don't have any depreciation, let's say in the case of land, we will not be creating, we will be not maintaining any depreciation. So in such a case, we will be using depreciation key 0000. Of course, we have already maintained this depreciation key all zeros in our asset classes by default, because we didn't have currently we don't have any depreciation keys so to assign. So we have maintained as default as 0000 in all our asset classes. Of course, we will go back and we will see them later. Okay, in order to have our own depreciation key, just go to new entries. I'll say 124 depreciation key, depreciation key. Okay, depreciation key for 1248. Or normally we will maintain the depreciation rate also, but I don't remember. One second, let me go back to multi-level methods, multi-level methods executing 124 here, levels. This is a 10%. What about the next one? So we have different rates here. For 148, we have different rates. For 124, we have 10%. So we can maintain that. So depreciation key, go to new entries. I'll say 124 depreciation key 10% for 1248. Okay, so this is the maximum amount that we have seen yesterday. This is an optional cutoff value. Also, we have seen this is an optional. What is a cutoff value? If you want to maintain some, if you want to have some scrap amount, if it is a defined one, then we will be creating a cutoff value here. We will be creating a cutoff value key. There we will maintain what is the percentage of the scrap, then accordingly we will maintain over here. The next, these are the additional properties that we will have to a depreciation key apart from those base methods, declining balance methods, multi-level methods, and period control assignments. Okay, so what is this? No ordinary depreciation with special depreciation. What it means? If we want to keep ordinary depreciation as zero when special depreciation has some value, we will be using this in the case of special depreciation. So the moment I select it here, if at all a particular asset has both ordinary depreciation and special depreciation, so when the particular asset has a special depreciation, then system will consider ordinary depreciation as zero, and special depreciation, it shows only the special depreciation. It shows only the special depreciation. So in this case, ordinary depreciation going to be zero all the time. It's going to be zero. So it says specifically no depreciation, no ordinary depreciation when we have special depreciation. So probably we will be selecting this in the case of special depreciation. We will see that later. Let me just work on that and see what about the special depreciation is. Next, no interest if there is no depreciation planned. Right. So what does it mean? No interest if no depreciation. It means if the system does not have, if a particular asset does not have any depreciation, then there won't be any interest calculated for that. If at all the particular asset has some depreciation, system will calculate the interest. That is the meaning of it. Otherwise, if you don't select this, what happens? Irrespective of the depreciation amount, system will calculate the interest amount. Next, period control according to fiscal years. Okay, so period control according to fiscal years. Normally, what happens is period control will be based on our calendar year. I mean, whatever the year we have. I mean, let's say whether it may be January to December or April to March. It means if at all you have January, if I say first period, January 1st to 31st December, February 1st to 28th, then in that case, system will calculate the depreciation accordingly. But if you have a different fiscal year, it means 445. This is the one that we have discussed yesterday. It means my first period is 1st January to 25th January. My second period is 26th January to 20th February. If you don't have a specific calendar period as your fiscal period, then you will be selecting this. Otherwise, you don't require to do. Next, this is the one I was talking about. Depreciation to the day. Depreciation to the day. It means while while discussing on the period control, we have seen certain examples, right? If you are selling it on 17th, 15th, or purchasing it on 20th September, 28th September, whatever it is, do you want to consider all the days? Then you will be selecting this. You will be selecting this. Let me select this. For this depreciation area, I'll select this. For the next depreciation key, I will not select. I'll show you the importance of it. So it will calculate the depreciation only for the active period. Only for the active period in the sense, suppose if I procure an asset, if I acquire, if I purchase an asset on 10th January, so when I'm calculating my depreciation on 31st January, system will calculate the days between 10th January and 31st January. So if I don't select, what happens is it calculates from 1st January based on the period control. Okay, similarly in the case of sale, if I'm selling it on 20th of September, so system will calculate depreciation from between 1st September and 20th September. But according to the period control, it it will calculate depreciation until 15th of September. So to avoid that, we will be using this depreciation to the date, day-wise depreciation. No reduction in short year. No reduction in short year. So short year in the sense we have already discussed about the shortened fiscal year. So the day, I mean, in the year when business started, we may not have full year, right? Suppose we are following January to December, and we have start. We have, it does not mean that we always start our business on 1st January. So probably we start in September or August. So even though you have 4 months or 5 months in that particular year, if you don't want to reduce the depreciation amount in that year, so you can select this. It means in a year if the depreciation is 1200, let's say we have started our business in the month of September, so in that particular year we are going to have September, October, November, December. It means we will have 4 months only. So if at all we have full year, the amount of depreciation 1200, month wise the depreciation going to be 100. But since in this year, since we have started on 1st September, only 4 months, 1200 divided by 4 months, it means 300 per month, the depreciation amount. So we are not reducing the depreciation amount in the shortened fiscal year. Okay, that is the meaning. Next, acquisitions allowed in the capitalization year. Okay, acquisitions only allowed in the capitalization year. It means I'm saying no, this is a default setting. Why I'm saying this thing? So if I procure an asset, let's say we have seen just a little while ago one example, monitor and CPU. And if I say no, it means acquisition only allowed in the capitalization year. It means I have procured this asset in the year of 2019. I mean monitor and CPU. Next year, I mean in 2020, I want to add mouse and keyboard. Then system will not allow us if I say yes here. So it whatever the acquisitions to be whatever the additions to be added to the acquisition all have to be done in the same year. So normally we don't do that because we might acquire some more assets in the subsequent years relevant to the acquired asset from the previous years. So we will select a no here. Number of places. Again, this is for decimal thing. Just we will ignore because we have already done the settings relevant to this earlier. That's it. Just double click on assignment calculation methods. Now here we will be assigning what we have done earlier. So double click on this. Now go to new entries. Here, depreciation type. What is the depreciation type? This is going to be ordinary depreciation. And phase, do you want to use from the start of the depreciation, or do you want to use changeover within the planned life, or changeover after the end of useful life? Which one do you want to consider? So from the start of the depreciation. Now you see over here, base method is a required entry, period control is a required entry, multi-level is again a required entry, but decline balance method is an optional. If you have a multi-level method without any depreciation, then you can use decline balance method. Otherwise, it is not at all useful. But there is there are a lot of advantages using the multi-level method. It means we can have the depreciation rate differently for each of the years. So since this has got more flexibility in using the depreciations, we will be maintaining the rate of depreciations over here. So ultimately what my point is, base method, period control and multi-level methods are important, whereas decline balance method, reducing balance method is not at all important. We can ignore that also. Okay, select the base method, select the base method. I will say explicit percentage. Then decline balance, if you want, you can use, otherwise you can ignore. And period control 01010202 is the one that we have seen. So let me consider that. Multi-level method, we have created our own. I will say, since it is the depreciation key is 1 to 4, let me select 1 to 4 multi-level method. I think it is just a 10%. We don't have multiple depreciation rates. So I've selected 1 to 4. Now coming to the class, whether you want to use straight line method or decline balance method. Or if you want, you can use other depreciation based on the base method. You can select the same thing. So I'm saying straight line method. Now change method. Do you want to change the depreciation? So in such a case, you can select the relevant. Otherwise, no automatic changeover. Whenever we want to change, we can go and change the same thing. there is a separate process for changing over in this the manual process. We will discuss that in the front end. And at what level, at what percentage, when the asset value reaches, you want this to be changed, you are specifying here. Then since we are not selecting the same thing, since I'm saying as a no automatic changeover, I don't require to maintain anything here. Next is multi-shift. What is multi-shift? Say we have three shifts. It starts morning 6 o'clock, goes until 2 o'clock, 2 in the afternoon. Again, 2 o'clock, it goes until 10 o'clock, and from 10 o'clock until morning 6 o'clock. If you have three shifts or one shift, probably we are going by one shift currently, but in the future, based on the demand, we might go for multi shift. So, how do you want? Does it impact your depreciation? How do you want how do you want the system to consider in the case of multi shift? So increase in depreciation and expired useful life. Do you want to increase the depreciation and reduce the useful life, or do you want to use increase in depreciation, no increase in expired useful life, no effect on depreciation and useful life, default value from company code and depreciation? How do you want to consider? So normally, in any case, normally we will consider the rate of depreciation by considering the multi-shift. So in that case, you can just say as no effect on depreciation and useful. In the next case, we will consider increase in depreciation and expired useful life. Now let us consider no effect on depreciation and useful. Normally what happens is we will consider all these parameters while while calculating the rate of depreciation. So normally there won't be any effect, but still if you want to consider differently, you can consider scrap value. Considering is controlled by cutoff value key. If you have any cutoff value key, you can maintain the same thing. Base value is reduced by the scrap value amount. If at all we have any base value saying about diminishing balance, you may have some balance, you can consider that balance amount as scrap amount. Or base value is not reduced, it means there won't be any scrap at all. Cutoff value is ignored, default value from company code and depreciation area. So which one do you want to consider? So we don't have control cutoff value key, so we don't require to do that. Either you can select base value is reduced by scrap value amount, or default value from company code and depreciation. So whatever the left out balance after the useful life, if you want to consider, you can consider the same thing. Okay, so default value from company code and depreciation area. Then shutdown. I'm just selecting F1 over here, not sure what calculate shutdown specifies that depreciation will be reduced or stopped if there are specifications for shutdown periods in the asset master record. Okay, so basically, how do you want to consider, how do you want the system to calculate the depreciation when we have shutdowns? Plant shutdowns, maybe due to the strike from the labor, or due to what do you call Christmas vacation, or due to some other thing. So in case if at all you have any shutdown, how do you want to consider, how do you want to consider, whether do you want to consider the depreciation during that period, or you don't want? So that is what the shutdown talks about. So it says as no, it means there won't be any impact. I mean, we are just calculating the depreciation as usually. Okay, so there are certain cases where we can consider yes, but normally we don't consider, just to save it. Right, any questions? Right. So let's create another depreciation key 148. We will say now going to create. Now, if you see over here, it is inactive. How can you activate it? Just select the same thing, go to details. You still you can see the status as inactive. In order to activate it, on the top you have an icon called activate. Okay, you just select that. This becomes now activate. You can see now activate. Just save. Okay, back. Now you can see the same thing. Or directly you can select this one and you can activate it. So you can see the status over here. Okay, back. This is 1248. Going go to new entries to create another one 148. So multi-rate depreciation for 1248. Then maximum amount cut value, cut off value date, and I'm not selecting day wise depreciation. Going into assignment of calculation methods, going into new entries, depreciation type, I'll say ordinary depreciation. Phase is going to be always my start of the depreciation. It is not based on the changeover. I will say explicit percentage over here, or I can say explicit percentage after the end of life. I can use this also. Then period, I can select decline balance method now. I will say 2 into 20%. Then period control, I can say 001. Then multi-level, I have a different multi-level method 148. Multi-rate depreciation. Now class is going to be the straight line, or if you want, you can consider decline balance method. Changeover method, I don't have anything. Then in the case of multi-shift, let me select increase in depreciation and expired useful life. Okay, consideration is controlled, scrap value, cutoff value is ignored, or value based from this thing. Or you can say base value is not reduced. So normally we can select this. Shut down, I say no. Save it. Back. Now, if you see over here, this depreciation key is inactive. So just go to details. You can see that in the status. And if you want to activate that, until you don't activate it, we will not be able to use this particular depreciation key. So in order to activate it, we have one push button. Just select that. It becomes active. So save it, back. So we have got two depreciation keys and we will start using them. Okay, we will start using them. Back. Now the period control, the one what we have seen earlier, will have over here. Maintain period control. Path for this is IMG, financial accounting, asset accounting, depreciation, valuation methods, period control, and maintain period control. Maintain period control. Just execute here 01 pro rata at period start date. When you go here in the details, you can see the same thing. Okay, you can see the same. And here, let me just select F1. Indicate determine periods from the period version. Using this indicator, you determine how the periods are determined for transaction. They are either determined in the same way as posting periods, or if you want them to be different, using the period control. So this data element is only used internal in the system. So what exactly it means is where how the system is considering, whether system is considering period wise or I mean calendar period wise or fiscal period wise. So system will consider that accordingly the moment you select this. This is basically a standard step. We don't have to do anything. The next you have is define control. You remember we have seen all of them, period control, all of them we have seen, right? We have seen all of them here in our depreciation key. Maintain period control methods. So these are there. I mean, these are there. You can see from that list. These are these are the values that we have it from this tab. Next, define calendar assignments. This again is standard, but it is little important for us to understand. Okay, define calendar assignments. Path is going to be the same. Just execute. Okay, what is our calendar fiscal year? Fiscal year variant. Our fiscal year variant is K4. Now in K4, if the period control is 0, 1, what does it mean? It considers from the starting of that particular month, first day of that particular month. Okay, it starts from the first day of the month. Okay, that is what 0, 1 says. 0, 1, the moment I consider 0, 1, what does it mean? It means system is considering, how can I say, it starts from the first day of the month based on this setting. Okay, the moment I say 2, what does it mean? Now if you see over here, if I have it, you see here month, first month, second month, I mean January, February, March, April, because K4 is a calendar year, it starts from January to December. You can see until here December. You can see until here. Now if at all you have first month until 15 days, so the period is going to be, what is this period? I'm just selecting F4 over there. Value date, period of depreciation interest calculation. Okay, so it means what is happening here in this case is first period, if I say, if I procure any asset, okay, if I procure any sorry, this 0 2 we are using it in the case of retirements, right? In the case of retirement we are using 0 2, right? I'm just going back and I'll open that and I'll show you. So 0 2 we are using it in the case of retirement and transfers. How does the system calculate the rate of depreciation in the case of retirement and transfers? That is what we are looking into here. So K4. So here in this case, period control 0 2 prorata up to mid period at period start date. It means period 1, it means January period until 15th day, it considers 0. It means there won't be any depreciation. I think I mentioned it differently earlier. Now what it is if at all you have 15 days, if the transaction is happening, I mean the retirement or transfer is happening up until 15 days in the first period, system will not at all consider any period. System just will ignore that. System just will ignore that. Now, if at all I have, you know, in the second period, if I'm doing it until 14 days, I'm in the first period, it will consider, it will ignore this second period completely, but it will consider the first period. In that fiscal year, it will consider only 1 month of depreciation. Okay, let me explain it you very clearly. Now, this is what basically the fiscal year which is talking about. This is our fiscal year. Okay, fiscal year is January to December. Now, this is what 0 to is the one that we are using period control in the case of transfer and retirement. Now, if I am retiring, if I am retiring a particular asset, okay, if I'm selling off one particular asset, then in the first period, if it is happening before until 15th of January, so no period is considered for depreciation. Suppose I'm selling an asset in the month of February. So if I'm selling it until 14th of February, system will ignore 14th of, because since it is happening until 14th. Why 14? Because February will have 28 days. So half of the month, 14 days. If we are selling any asset until 14th, system will ignore for that period. But since in that fiscal year we have already one period over, that is January, so system will calculate only the depreciation for 1 year. Now, if I say this thing, June period, if I'm selling it until 15th of June, then system will not consider June month depreciation. System will calculate for January, February, March, April, May, 5 periods in that particular fiscal year. So that is the meaning of this part. If you are selling it sometime in October until 15th, it means January to September, 9 months. So system will calculate depreciation for 9 months in that particular fiscal year. So this is what basically controls the period control. The next we have is mid month. Of course, we don't consider this thing. The moment we select here, system will always consider 15 days, mid month always. Set this indicator if depreciation using this period control should be calculated based on half periods. Only half periods, then system will calculate. It is, for example, the depreciation according to the mid quarter conversion in the USA. There is a specific requirement in US. So according to that, we will select this, but normally we don't do that. So it always consider half of the month. Okay, so that's about the period control thing. I'm not saving anything, just ignore. Next we have is further settings. Of course, we don't require this. Specify asset specific base value percentages. Let's see. Specify asset specific base value percentages. Path for this is IMG, financial accounting, asset accounting, depreciation, valuation methods, further settings, specify asset specific base value percentage. Just execute. Just execute. For our company code 1248, I'm just selecting double click on asset. Okay. If at all we have any asset, and you can mention specify base percentage, base value percentage. So this is based on the asset for the depreciation area. Of course, we have not created any assets now, so we cannot do anything here. So we don't have to do anything over here. These are all company code relating to different company codes, not our company code. So we cannot do anything over here. Suppose if you want to do for any other company, if you want to do this, based on an asset number. So once you select an asset number over here and double click on depreciation area, you can see all depreciation areas, and based on that particular depreciation area, you can mention the base value method. So we have already mentioned what is the base value for our depreciation key, and within that you also mention base value percentage. So in the case of depreciation, base method, sorry, in the multi-level method, execute 1 to 4, select this level, base value here 0 1. What is 0 1? Acquisition value. It means if the asset value is 1 lakh dollars, let us assume, right? Do you want to consider 100, I mean 100,000, I mean 1 lakh, or do you want to keep some base? If I say 50%, system will consider only 50,000. If I say 60%, system will consider only 60,000 while calculating the depreciation. Okay, so do you want that? You can maintain the same thing based on depreciation area here. Just execute for our company code the asset. You select the relevant assets and select the relevant asset and double click on a depreciation area. We'll have all depreciation areas. Select the depreciation area. Then once you double click on specify base value percentage, it means you can enter some percentage. System will consider that percentage only while calculating the depreciation amount. Even if the asset value is 1 lakh and the depreciation amount per year 10,000, based on this 50% or else 60%, system will consider 60,000 only out of 1 lakh. On 60,000, the depreciation going to be 6,000. So we don't select this because again it is the asset master is created in the front end, and this requires a transport request. So we don't do this at all because we have other options like scrap, right, cutoff value, all we have, so we don't do anything. Next enhancement, of course it is not required for us. So this special valuation, this is the one I was talking about, special depreciations. We have different things over here. We will have to figure this out. Next is master data. Master data. Now the screen layouts. We have discussed the screen layouts in our initial classes. Okay, in this we can see create screen layout rules. Here we have created for every asset class, we have created a separate screen layout. So it does not have any properties over here, but what exactly the screen layout does, it basically it controls basically the field status. What are fields required, what are fields optional for the master records, for the asset master. So it does not have any properties. Now the properties will come up over here, screen layout. Now within this we have two types of screen layouts. Screen layout for asset master, screen layout for depreciation area. Okay, so before we get into this, okay, here, determine depreciation areas in asset classes. Just execute this. Our asset classes X100, select the same thing, double click on depreciation areas. Here we have maintained all these things earlier. Okay, now here if you see the layout, I was talking about the depreciation key. This is what the depreciation key that you can see by default at the time of creating any asset using this asset class. We will discuss that part little later. In the front end, I'll show you this part. We will come back here. We will change the depreciation key and we can go and see over there. Now, why did I come over here? Just to give you some information about this. Now, I'm clicking on F4 over here. I have two, basically I have got two. Okay. One is the depreciation on main asset number and depreciation on sub asset number. Okay, these are the two layouts, standard SAP standard layouts. We will be using them. Now here we can see 1000 and we also have 2000, which we can discuss here in this. In the define screen layout for asset depreciation areas. So path for this is IMG, financial accounting, asset accounting, master data, screen layout, define screen layout for asset depreciation area. Just execute. Now you can see them. 1000 here. This is required for the depreciation. I mean, just we will show we are not doing anything over here during the front end. We will back here, we'll come back here and we will see. So select the screen layout, double click on field group rules, double click on this. You see here whether depreciation key, maintaining a depreciation key is a required entry or optional, or it is suppressed, or it is just a display. And these are the field status things. Whether you want all these in the case of asset class. If I say in the case of asset class, whatever the asset I'm creating using this asset class, all will have these properties. And if I say main number, main asset, sub asset number, you can maintain. And in the case of copy, if I select copy, using this screen layout is assigned in the depreciation area. We have seen that just a while ago. And using that, we have created an asset. And when I want to create a new asset, if I want to copy this asset, the existing asset, all will have the same properties since I've selected this. Sub number, sub asset. My monitor and CPU is my main asset, and my sub asset is mouse. Mouse is my sub asset. So if you want to consider that as a sub asset, you can select this. So whatever the property that you have here, whatever the field status that you have for these four, that is applicable for asset class, for main number, and for copy. If you select this, even the same thing is applicable for sub asset number also. And like that, we have these many. And I'm not going to touch anything. We will be discussing this more clearly in the front end. So that time we will come back here and we will maintain, we can change. This is similar to that of our field status. If I say is a required, it will be a required entry. Without that, system will not allow me to post. And if I want to make it required in the case of useful life, I can select that. That we will see in the front end. That time we will come back here, we will make some changes over here, we'll see the impact in the asset master and depreciation area level. Back. So this is in the case of sub number. I'm selecting the same thing, field status. Again here you can see. Next, define depreciation screen layout for asset master data. This is the one what we have seen in initially. So here, whatever the screen layouts that we have created, so those are to be considered here. So this is specific for asset master creation. While creating the asset master, what are fields required and what are optional, that we will be discussing here. But this is exclusive for depreciation area related fields. Okay, we can discuss them in the front end clearly. You will understand more clearly. Define screen layout for asset master data. Path is same, just execute. Define screen layout for asset master data. Double click on that. Or if you want, you can create from here also. Create screen layout rules for asset master. The same thing. It goes into the same location. And here we will be selecting define screen layout for asset master data. Double click on this. Again, here we have the screen layout X100 first one, selecting logical field groups. And these are the tabs that you can see in the asset master. In the general master, double select general master, then double click on field group rules. These are the fields that you can see under this general data. Now, what are the items that you want to keep required, optional, suppress, or just display? You can do based on this. And whether you want it for asset class, for for this entire asset class, this is going to be the same information. It means for if I select this asset class, so here I've selected asset class, it means account allocation is required based on the asset class. Okay, at the asset class level, we have maintained the allocation already. Account allocation, it means we have already maintained the GLs at the asset class level. So that is the meaning. This is for main asset, sub asset, and this is in the case of copy. So I'm not going to change anything. We will see them little later. Logical field. Now the important thing is time dependent data. Here, double click on field groups. Here we have a cost center. Okay, so normally we will keep it as a required entry. Why do we require cost center as required here? In the asset master, we will maintain a cost center. Why do we require a cost center? Any cost object is required. Okay, why do we require a cost center? At the end of the month, we will run the depreciation. During that time, system will post an entry called debit depreciation credit accumulated depreciation or provision for depreciation. You can call it anyway. Okay, accumulated depreciation gets credited and depreciation gets debited. This is an expenditure account. This depreciation is an expenditure. It is a cost element. So cost element requires a CO object. So cost center becomes important in this case because cost center is one of the CO objects. The moment I say here cost center, the moment I have a cost center in my asset master, while posting the depreciation, system will pick up this depreciation. It means whatever the cost center the particular asset has, and while determining the depreciation, system will pick up this particular cost center. It means the cost center whatever we have in the asset master. So normally we will keep this as a required entry, but we have here by default we have it is not a required. We will make it as a required in the front end when we are creating our asset master. We will come back here and we will change that. So at the moment, I'm not doing any changes here. Any questions here?
Nanda, like cost center, but in place of cost center, if we wanted to use internal order, can we
You
just?
can use, you can
Oh, okay.
use, you
Uh,
can use. So
uh,
if you want that as a required entry, you can keep
yes.
it as a required entry. Always system will trigger the, you need to enter a you need to enter the internal order in that required field. So system will trigger that accordingly.
And same thing goes with the WBS elements.
Yes.
Okay.
Okay. So I don't think we have an option to enter the WBS element. I'm not sure because I've never tried it. I don't know because normally we don't select depreciations in the um, WBS element. Not sure.
So Nanda, even if you just don't, even if you just leave it as an optional entry, but since the
Mm-hmm.
expense account, has the cost element on it, so it
Mm-hmm.
automatically becomes a required entry. So whether or not you
It
define
is
or
a
not,
required.
right?
Yes, it is a required entry. Now, why I'm saying required, it means the system will not allow us to save the master data without entering a cost center. Now, if I mention it as an optional, I
Hmm.
let's say I did not enter any cost center in the asset master. Now, at the end of the month, I'm running the depreciation. So depreciation requires a CO object. It
Right.
goes and checks in the master data. Since the asset master does not have a cost center, system will throw up an error.
Hmm.
So in order to have a compulsory transaction, in order to have a compulsory on this field, we will keep it as a required so that in the master data, while saving the asset master, system expects the cost center. Without the cost
Okay.
center, system will not allow us to save.
So we have a here cost center, but same way, do we have a field for
WBS is
internal?
not here.
Oh, okay.
We don't have WBS. I think we will have an internal order. We can get that internal order. I think once we have the internal order is activated, probably we will have, but we have an option. See, maintenance order is there. So similarly, we can have the internal order.
Okay.
We will have an internal order, but I've never seen, the WBS element here in this. I think we may have, but I've not seen. Not sure on that. So we will have those, the CO objects in the time dependent only, but still I'm just checking allocations. No, it's not there. Okay, so that's about the screen layout for both of the asset, master and depreciation areas. Okay, next is specify tabs for asset master records is not required. So what are the tabs that you want in the asset master? That is what this says, but system will capture all these things. So by default I think we will have SAP. The moment I select the SAP tab page, we can see all of these tabs. These are the tabs that you can see in our asset master. Let me open the asset master. I'm not going into the path. I'm just entering the transaction X200. Our company code is 1248. What happened? Fiscal year variant K4 is not defined in calendar year. So there is some issue with it. I will see. Looks like there is some issue with it. But once we enter into here, we will see different tabs. All those tabs are based on this. Okay. So under general posting groups for tabs, these are the general inventory. Based on this group, the fields will appear. We will see that later. This is a standard setting. We don't have to do anything in this. And next we have is user fields. So evaluation groups. These are the fields that you can see in our asset master. You can see asset super number. Asset super number. What does it mean? It means it kind of a group of asset. Group of asset. If at all we want to see, I mean, what exactly this thing is, if I say, Okay, I have super number. I'll say 1, 2, 3, 4. I have assets, let's say 1, 2, 2, 3, 3, 4, 4, 5, 5, 6. Let's say we have these assets. We have these asset numbers. In all these asset numbers, I have entered a super number. It means if I want to see my reports, if I just select a super number, I can see the details of all these assets. It is just like a group of all these assets, nothing but a super number. The super number is going to be one of the fields in the asset master. So if you want to have that, we will create over here. Just go and create some asset if you want to have. I will say 1, 2, 3, 4, super 1. I'll say 2, 3, 4, 5, super 2. So you can see this is basically for reporting purposes. And here, even in this evaluation groups, you can use for the reporting purposes basically. Next is automatic creation of equipment master. This is something relating to PM, plant maintenance module. The moment we create a plant there using the plant maintenance, the same will be created and equipment will be created in asset. For that, we will do some settings over here. That is not required for us. Okay, next is transactions. This is again the standard settings. Okay, in the case of acquisitions, what are the transaction types that we will be using? So as I said, transaction type, at the time of posting any transaction, asset transaction, system requires a transaction type. You see here, this is what the transaction type. This is what the transaction type. Okay, so these are the transactions type that are available. So by default, system will pick up certain transaction types. So what are the transaction types that we will be using in the case of acquisition that you can see over here? Just execute. These are the transaction types that we have during the acquisition. And similarly, in the case of retirements, we can see certain transaction types. Transfer posting, intercompany transfers. This capitalization of asset under construction, this is a separate, separate configuration, separate scenario that we will see later. And again, here we can see what are the transaction type that are there for this asset under construction. So for post capitalization, manual depreciation, what are those? For default, specified default transaction types. Yeah, determine transaction type for internal transactions. All those are different transactions. These are all basically, the standard settings. So this information system is for reporting purposes. The short versions that you can see in the reports. Okay, let me just see. This is again a standard. We don't have to do anything, but I will give you some information because this helps in the asset reports. Define short version for asset reports. Path for this is IMG, financial accounting, asset accounting, information system. Define short versions, just execute. These are the different short versions. So if I select 001, company code, business area, balance item, balance sheet account, and asset class, all these will appear here. These are all there. Table and fields, all are here. Now I'll open one asset report. So I'm not going to discuss that in detail, just I will show you the importance of the sort key. Individual asset balances. So if I say asset balances, asset list. Now, if I select here, we can see a sort variant here. This sort variant is nothing but this one. Okay. Now, what is the sort variant we have here? It is 0014. 0014 is this. Select the same thing, go to details. It means it is based on the cost center. Now, if I select over here, this is the one, right? Of course, we don't have anything for our company code. Let me select a different company code. I'm selecting the standard company code 001, execute, no data. This also does not have any data. Let me select 1000. Yeah, I can see now. It is based on the cost center. Now here this thing asset and cost center. Cost center is this one. Okay, so you can see the report based on the cost center. Suppose if I select the other one, business area, of course we are not using business area. Let me select asset number by asset by super number. Just now we have created. Now here we will be entering the asset super number and company code. Just execute. You can see the assets based on the super number. Okay, now here sort variant is uh, all zeros one. Now if you see all zeros one, what is this all zeros one says? It is based on company code, business area, balance sheet item, balance sheet APC value, and asset class. All these are there. You can see all of them here in the report. You can see all of them. See asset class, APC value, then you can see all of them here. Business area, of course, we don't have here. We have some standard business area. Okay, so that is the meaning of, if I select plant, you can see all zeros one. It means we don't have any sort variant for plant. If at all you want, you can select that one. It is based on company code. If I select 0013 and I'm selecting list assets, I can see based on the company code. That is the meaning of it. Okay, so that's about this sort. We don't have to do anything here, but wanted to tell you the importance of sort variant. Now, asset data transfer. Okay, asset data transfer. This is this is the important in the case of uploading the data. It means during the go live, we will be covering this part. Now, in the older version, we used to have a transaction code called AS91. Using AS91, we used to create legacy master data, asset master data, and we used to update the values also. Then after that, AS, I don't remember exactly. Now, in the older version, let me just talk about the older version. In the older version, how did we, how we used to, once again, how we used to, how we used to upload the data. It means until before S4, and we will see after S4. After before S4, we used to have a transaction code called AS91. With this, what happens? We used to create asset master and value of the asset in asset accounting. Okay, what happens in this case is we used to create whatever the number of assets that the legacy system has, existing system has, all will be created along with the value in AS91. Now the value whatever we used to maintain here in this will appear only in the asset accounting. It will not get updated in the GL front. In order to update in GL, we used to use one more transaction code called OASV to update the value in finance. It means in GL account. We used to do these two transaction code in in ECC until ECC. But in S4, it's not that. AS91 is for asset master only. The value will be updated using ABLDT, a new transaction code which updates the value both in asset accounting and in finance. That's the difference. That is the basic difference. So we used to create AS91. We used to use AS91 for creating the asset master and value posting in the asset accounting. And we have another transaction code OASV to update the same value in the GL account. But here in S4, we have S91, AS91 as usually for creating the asset master, but for value updation, we are not using OASV. We will be using a new transaction code called ABLDT. This part is discussed here in this node, asset data transfer. So select the next one, define transfer date and additional parameters. Path for this is IMG, financial accounting, asset accounting, asset data transfer, parameters for data transfer, define transfer date and additional parameters, just execute. What does it says? It says what is the date that you want to consider? What is the date that you want to consider as a transfer date? Okay, what is the transfer date that you want to consider? What is the transfer date? Here, general data, company code status, productive, deactive, and company code locked, legacy data. These are the two tabs that you can see. First, let's go into the general data. For our company code status is for testing. The moment I say productive, the moment I say productive, it means it is no more a testing data. And the moment I say productive and move the request to the next systems, it means the system is in productive now. So we are not going to post any data, and the system has, we are not going to post any test data. All are going to be the real time data. Okay, so with this, what happens is the company code status is active. With the productive, it says an active. If you want to block the company code, you can block it by selecting it. It means this company code, this company code will not at all work in the asset accounting. Now coming to the legacy data transfer. Transfer date, what is your go live date? That is what it explains. Now here we will be maintaining the date. Now the moment I say 31st December 2019, it means my go live date is 31st 12 2019. It means my go live date is 31st December. From 1st January 2020, all the calculations have to happen. It means my depreciation should start from 1st January in the new system. That is the meaning of it. Now, legacy data transfer in preparation means it is still happening in preparation. It always says as in preparation. Okay, what is the document type that you want to consider for this uploading? Normally, we will select UE. There is a new transaction document type UE. This is to be used for all the transfers, not only the assets, for all the GL balances uploading, customer vendor balances, all for all we will be using UE. So the moment I say UE, uh, and system will consider UE as the document type while posting the data using ABLDT transaction. So we will be selecting UE as a document type for all the uploading values. This is specifically for asset related. Okay, just we will be saving. Of course, I'm not going to maintain over here because it is a testing system. I'm not going to maintain any transfer date. Just to save. Okay, still it is in the preparation. Or I'll say 31st, uh, 31st, I will say July 2019. See, legacy data transfer date 31st is in a closed fiscal year. Why closed fiscal year? Let me just close it. It means there is some fiscal year issue, fiscal year variant issue there. I will have to figure that out. So this node is basically helps for the uploading of the data, existing data, legacy data. Any questions? Okay, financial accounting, asset accounting, asset data transfer. Okay, specify offsetting account for legacy data transfer. As I said, we will be using ABLDT for uploading the data. What happens while uploading the data? So the data in ABLDT, we will be entering a document. We are not going to enter any document type in ABLDT. So with this, in the above step, we have maintained a document type. So based on that, system will consider the relevant document type. Here we have maintained a document type. System will consider that accordingly. And the other thing what we require is the offsetting account. What it means. So at the time of uploading the data, we will be uploading the data individually for each of the asset. And let's say the value is $1,000. And what should be the credit item? We should have one conversion GL created for this. Conversion GL. This is nothing but offsetting GL. This offsetting GL is maintained over here. Specify offsetting account for legacy data transfer. Just execute. We will be maintaining one offsetting GL. This is nothing but a conversion GL. Conversion GL or conversion GLs are important for all balance sheet items. In a balance sheet, in a typical balance sheet, we will have in a typical balance sheet, we will have, let's say, capital, reserves, vendor balances, right? Overdraft, right? Then in this case, fixed assets, customers, bank balances, and all other stuff, right? Stock, all of them. Now, vendors, customers, fixed assets, all these are to be loaded individually. For each and every item we will have to load individually. So this is called vendor, this is called customer, this is called fixed asset, and the remaining things are all called GLs. It means typically we will have to load GL balances, customer balances, fixed balances, fixed asset balances, vendor balances. These are to be loaded. While loading the data, we don't enter all of them at a time. We will load individually. It means first we will load fixed assets. All fixed assets show debit balance. So I'll be taking fixed assets on the debit side. What is my credit account? Credit account going to be the conversion GL, right? So like that, for every item I will create capital, I will say I will keep it on the credit side capital. What will be my debit item? Debit item going to be my conversion GL. So for each of these heads, we will load them individually, and these are considered on the credit side individually, and on the debit side we will take conversion account. All these will be considered on the debit side, credit side will be conversion account. After uploading the balance sheet, the conversion account will have zero balance. It means both the debit and credit items will match equally. When it equals, when all the values of the balance sheet is loaded into the system. When all the values of the balance sheet is loaded into the system. Okay, so that is what basically this thing about. That is what basically the conversion GL. So we can use one conversion GL or we can use multiple conversion GLs. Okay, multiple in the sense, for fixed asset one conversion, customers another one, bank for GLs different one, for vendors another one. But ultimately, when I take all the totals of all these conversion balances, it will show zero once the entire balance sheet is uploaded. So that is what this conversion GL talks about. This is what offsetting GL account. So these are the transaction types for transfer open balances, then manual entry. So create master data for legacy asset. This is what the same entry, same transaction code, AS91, path is same IMG, financial accounting, asset accounting, asset data transfer, manual data transfer, legacy fixed asset, create master data for legacy asset, just execute. Here you can see a transaction AS90, 91. The moment I enter the date, the legacy data transfer date is blank, because of that you're not allowing. But the moment we enter here, we can create the asset master as usually, but We cannot load the asset values. We used to have that option in the ECC system. So here in using AS91, just we will create the legacy asset, and the values are to be loaded using ABLDT transaction. That is what here, post transfer values. Path is same, just execute. You can see asset value assets, we don't have asset master, and ABLDT is a transaction code. Let me just select 1000. Okay, this is the asset number. Here we will be entering the acquisition value, revaluation value, invent, investment, ordinary depreciation, special depreciation, unplanned depreciation. All these things are happening here. I will say acquisition value 1000. Okay, and I will say ordinary depreciation 200. Okay, now just simulate it here. Ledger A1 defined. So some activating issues, but the moment we select it here and the moment we say a simulate, we can see a journal entry. Okay, so that is about ABLDT, and that the document type is going to be UE, the one what we have assigned, and the offsetting account is going to be the GL that we will be assigning over there. Let's see, let us discuss this one also. Okay, once everything is active, still it is happening. Okay, that's about the legacy transfer, asset data transfer is that. Next is product preparation for go live. There is one authorization management, no, not this one. See, production startup, define settings for account approach, set reconciliation. Yes, see here, accounts approach, set reset reconciliation accounts for parallel valuation. Path for this is IMG, financial accounting, asset accounting, preparations for going live, production start, uh, accounts approach, set reset reconciliation accounts for parallel valuation. Just execute. If you want to change, you can change your reconciliation accounts here. Select our company code, change control of reconciliation accounts. If you want to have a reconciliation account to be changed, you can do here using this. But normally we don't do this. Next, define settings for company code. Path is same, just execute. Here we will be mentioning company code active or not active. We will be mentioning. Of course, this is the transaction we have already seen. This is the transaction we've already seen, but there we just have seen the legacy data transfer. But here, this thing it talks about company code active. So with this, the company code is in the active mode. So after I select this productive, system will not allow me to post any legacy data, any legacy asset transfers. System will not allow me to post any legacy details. Once I say productive, legacy in the sense only the assets related, or whatever the asset legacy balances to be loaded, all are to be loaded before I set it as productive. So once the asset, all the assets are loaded, I will say productive, and system will not allow us to create any legacy details after this. Okay, so that is what this step again is an important step. Okay, so that's about pretty much on the asset accounting thing. So just go through all the recordings once. Just go through all the recordings once and go through all of them once. And tomorrow we will start the front end. I'll just check. I think we have some issue with the fiscal year or something. I will have a look into them and I'll let me see that. Okay, but go through all the recordings in the meantime, and if at all we have any questions, we will discuss them first. Then we will start front end. Any
Nanda,
questions? Yes.
Nanda, can you give us some small example, how the balance get transferred to the from legacy system to the SAP in
No,
productions?
we will be posting the documents. That's it.
Okay.
Okay.
Like suppose if we have, like $1 million of worth of asset, like in combinations of all the asset class. So we have to just do it, to make sure, that clearing offsetting account becomes zero.
Mhm.
So in that, how the entry will be passed on that?
Right. So let's say we have two asset classes. Let us
Okay.
assume.
All right.
In each asset class, we have different assets. Okay. We have different assets. And each asset has a value.
Right.
Okay. These are the values. Now, what we will be doing in ABLDT, using ABLDT, we will be entering each asset number and we
Mm-hmm.
will be entering each amount there,
Mm-hmm.
right? So in
Right.
such a case, the entry going to be assets, all these assets will be debited, credit is going to be conversion GL.
Okay.
Let's say our conversion GL is 1234. So let's say the total, our balance sheet has vendor 10,000 and other GL balances, let's say 20,000 on the liability side. On the asset side, let's say we have fixed assets 12,000 and the debtors, let's say 18,000 or else 15,000 GLs, let's say 3,000. Okay. As I said, in the case of fixed assets, debtors and vendors, we will have to load individually assets individually. Let's say vendor, we have one, two, three vendors. Let us assume this vendor has one, two, three, four, five, six open items. One, two, three, four, five open items for him. One, two, three, four, five, six, seven, eight open items for vendor three. Now each items will be loaded. I mean, this is in the case of vendors and customer. Each will be loaded individually. So in the case of vendor, these items will be credited, right? And the debit will be conversion GL, which is 1234,
Mm-hmm. Okay.
right? So what happens after all these? It means we will have entries like this. First debit 1234 conversion GL, which is 10,000, credit vendor. Vendor in the sense all will be individually. I'm just giving you an idea. But here we will have, if at all you have vendors of 1 lakh line items, you will be entering all 1 lakh over here.
Okay.
Then similarly, debit 1234 20,000 and credit GL, which is 20,000. This is on the liability side. On the asset side, debit fixed assets 12,000, credit conversion, which is nothing but 1234 12,000. Then debit debtors 15,000, credit 1234 15,000. debit GL 3000 and credit 1234, which is 3000, right? I'm just showing you one line item, but if at all GLs are 100, you will be entering all 100 debits. If at all you have debtors of 2 lakhs, you will be entering all 2 lakhs debit items and credit item going to be conversion GL, like that. Now, after this, it means the entire balance sheet is uploaded in the target system, in the SAP system. Now, once you open the conversion GL, here debit 10,000, 20,000 debit, total debit is 30,000. Here conversion account 12,000, 15,000, 3,000, total credits again 30,000. Debit, both conversion debit and credits are same, it will be nullified.
Okay.
Got it?
Yes, yes,
Yeah.
yes.
This is how we will be loading the data into the SAP system.
All right. Okay. All right. Okay. Yeah. Very well explained. Thank you.
Of course, we are going to discuss one exclusive class on this. I've
Okay.
just given a glance on it, but we will
Okay.
discuss them clearly.
All right. Okay.
Any other questions in the asset accounting?
No, Nanda, we have to go through the recording and see,
Yes.
if we don't understand. But I think it was very well explained. Thank you.
Yep. Okay. So thanks everyone. So tomorrow we will continue our session.
Sure.
Okay.
Thank you. Thank you very much.
Thanks a lot. Thank you. Bye.